All right, welcome to the fifth session of our financial management workshop. And in this workshop, we are going to be looking at debt and credit management. Now, debt and credit are very, very important component of financial stability and financial freedom. If you want to build your financial stability, want to build wealth, you almost cannot do without credit and debt. Now, what is credit? Credit is your ability to borrow money, the record, what we call credit score, the good records of financial management, the good record of revenue that you have that gives you the leverage or the ability to borrow money. And then debt is the actual amount of money that you are owing. Now, there are a lot of things that need to be put into consideration at every point in time that you have to use your credit to acquire a debt. Why? Your credit is like an opportunity that you have, and as we know, every opportunity ought to be well utilized. Now, many Nigerians struggle with debt. They struggle with they struggle with debt because of high interest loans, impulsive borrowing, and lack of financial planning. I take that again. A lot of us struggle because of high interest loans. When you collect high interest loans, number two, impulsive borrowing. You just borrow for the wrong reasons. When you borrow for the wrong reasons just because you need money, that is an impulsive borrowing. And then also we talk about lack of financial planning. Lack of financial planning is another serious problem why we struggle with debt, right? Now, so in this session, we are going to be looking at how to manage your debt effectively. We are going to be looking at best practices for using your credit wisely. And then we're also going to be looking at strategies for staying debt-free. How you can make sure that you don't get locked up within the chunk of debt. Because that is something that a lot of people are struggling with. A lot of people have found themselves tied down and held hostage by debt. They have a lot of debts hanging on their head that they need to repay, and sometimes they take loans to pay their debts. Now, that is a very, very critical financial situation to be. You need to be placed in the financial CIU, right? Now, let us even understand the difference between good debt and bad debt, because like I've mentioned, if you want to build wealth, it is almost impossible to do so without debt. You're always going to get some form of debt, whether you are getting it from family or you are getting it from an institution. Now, the good debts are debts that are focused on your education, focused on investment, for example, investment in real estate or investment in business expansion. You want to expand your business, or you're taking a mortgage loan to be able to get a home for yourself. Any loan that is focused on values that has the capacity to generate back that loan or that debt is what we call good debt. Now, bad debt are borrowings that are focused on luxury items. You borrow money to buy a luxury item, you borrow money to go on a vacation, or you borrow money for impulsive shopping. That is a bad debt. Why? What you borrow the money for, what you invested that money in doing, will not have the capacity to generate enough revenue to be able to pay back that debt, right? So it doesn't have commensurate value for debt. Remember that in most cases, debt is not your money. Credit is not your money. It's a money you took from somebody else. It's a money you borrowed from somebody else. If it is your money, you can spend it however you want. But we're talking about money that is not your money and that you have to pay back, and in most cases pay back with interest. You cannot afford to spend those type of money on anything, on just anything. You have to make sure that you focus spending such types of money which are not yours, and especially when they come on interest terms. You want to focus it on a project that can give you the value for the interest you're going to pay on top of that money. If you collect 10,000 naira from your friend and you pay your friend back 10,000, it is your friend that is losing. Why? Because if you collect 10,000 in month 1 and you are paying back that 10,000 in month 2, inflation has affected that 10,000, but your friend does not charge you for the inflation. It does not charge you for interest. That is why banks charge you for interest, because if a bank gives you 500,000 today, that 500,000 is not going to be 500,000 in 6 months' time. So if you are coming back to give them 500,000 in 6 months' time, the bank is losing. That is why they charge you interest. You understand? So a good debt is a debt that has the capacity to provide you value that covers both the principal that you borrowed and the interest that subsequently comes upon it. You understand? All right. So now let's look at common sources of debt in Nigeria. If you're in Nigeria, what are the common sources of the common places where you can get loan or get a credit facility? Number one is what? Commercial banks. Many commercial banks offer loans to individuals and to businesses. Of course, it comes with a high interest rate, but again, it is regulated by the Central Bank of Nigeria, for instance, and any central bank in any country where you may be watching this video from. Their interest rates are usually set by the central bank, right? So it is highly regulated. The next is microfinance and payday loans. We have microfinance banks that are out there issuing loans. Of course, it is easier to get loans from microfinance banks than commercial banks, but again, it also comes with it also comes with regular payments. Unlike commercial banks, they can give you a loan for a year and leave you for a year. You can discuss the payment terms with them, but many microfinance banks will insist on monthly repayment, which means on a monthly basis you have to repay back the loan. Now that can put a strain on your financial capacity, and you seriously have to consider it, especially if you are taking the loan for an investment that does not have the capacity to immediately generate that subsequent or frequent repayment terms frequent repayment terms. The next is loan apps and digital marketing platforms. Now, loan apps and digital marketing platforms, we have seen a surge of them in the recent times, and they come up and they're even faster compared to commercial banks and compared to microfinance banks. Their loans are usually faster. Within 3 minutes, you have gotten the money in your bank account. But then they also come with their own issues, because they also charge their interest rate on a daily basis. Many of them will tell you 1.5% in the day. You may think that 1.5 is just 1.5, it's just 1.5, it's more. But what you don't know is when you times the 1.5 by the 30 days you are taking the loan, or by the 60 days you are taking the loan, at the end of the day you realize that you may end up paying more than 100% of what you are taking, or sometimes even up to 40-something percent or 50% of what you are taking from them, right? So it's something that is also need. If you have to resort to them, you need to also be sure that whatever investment you are putting in, the money is able to generate the interest and even more. The next is your credit cards. Of course, credit cards are not widely used in Nigeria, but they're also very, very useful when it comes to managing debt and getting your loans and all that. And then we also have your cooperative loans and family borrowings. Cooperative loans are loans that you collect from cooperatives that you belong to in your office space, or wherever it is that you belong to, the cooperative society. I suppose that many cooperatives usually offer loans to their members at even a more friendly terms. Sometimes maybe interest free, or maybe the interest is one digit interest rate or something like that. And then family borrowings. Many family borrowings comes with almost no string attached, no interest rate attached. So if you want to take a credit, these are some of the options that are valuable to you that you may want to consider. Now let's look at some strategies for managing your debt effectively. If you take a loan from a cooperative society, from a family, from a commercial bank, from a microfinance bank, or even from a loan app, how do you ensure that you are able to manage this debt you have collected creatively? Number one is to create a debt repayment plan. You need to come up with a plan of how you are going to repay that money. Don't just go and borrow your money without a plan for repayment. So you want to list all the debts that you have, prioritize the ones that have high interest loans, the ones that have high interest. You have to prioritize paying them first before the ones that have low interest, because the longer those ones stays, the more the money accumulates for you, and then you want to make consistent payments. If you want to make payments, you want to make sure that you are consistent with the payment, right? Then negotiate your loan terms for many commercial banks and even for microfinance banks, and then from cooperative societies, and then from family. You have the opportunity to really sit down and negotiate the terms of the loan, the repayment terms, the duration of the loan, and all that. You see, all of these things are the amortization of the loan. How long are you going to hold the loan before you can start to pay? All of these things are things that you should be able to look at and also negotiate, which is why it is also important for you to go for options that allow you to be able to negotiate these terms favorably, right? The next is avoid borrowing for non-essential expenses. Please, if you know that what you want to borrow for is something you can do without, it's something that if you don't do it, it doesn't affect your comfort, it doesn't affect your daily living. Even if it affects your comfort but a little, and the impact is not that grievous, just don't take a loan, right? Because if you do, it may fall into the category of what we call the bad debt. Bad debt in the sense that you have collected the money, you have used the money for something that does not have the capacity to give you the commensurate value for the stress, for the interest, and for everything that comes with taking a loan, right? Right. Fourthly, increase income streams. It's important that once you are beginning to take up credit or debt, that you need to multiply your source of income by either getting a side hustle or investment that can generate some additional income for you. Then fifthly is using the snowball or the avalanche method of debt repayment. Now, the snowball method of debt repayment, pay off small debt first to build momentum for big debt. So this is particularly for people who are already in the ocean of debt. You are deep in debt, you are struggling with debt. You want to consider using any of these two methods. The snowball method focuses on paying small debts. In that way, this is useful for people who don't have the habit of debt management, who don't have good debt management skills. If you don't have good debt management skill, you want to try out this method, by focusing on small debt. Start repaying the small debt, then from there you can start tackling the larger debt. While the avalanche method focuses on repaying high interest debt, first to minimize overall interest loans. So what this means is that you start paying debt by the ones that have high interest rate, whether they are big or they are small. As long as they have high interest rates and they could increase over time, increase your cost over time, you want to start covering those ones first. Now, let us talk about some of the tips that you can use to use your credit wisely. Remember, we talked about credit earlier, and we mentioned that credit is your ability to borrow money, the good records that you have to borrow money. Now, how do you use that opportunity? How do you use this to your advantage? Number one, borrow only what you can repay. Don't borrow what you can't repay. Any amount of money you do not have the capacity to repay, don't. There is a reason why no bank will loan you the amount of money you have never made. You can't go to a bank now and tell the bank, I want to collect 50 million. The bank have to check, have you ever made 50 million? Have you ever had an income of 50 million? If you have never made that amount of money, the bank is not going to give it to you. They are not foolish. Don't borrow an amount of money that you cannot repay, right? Very, very important. Then two is read the terms and conditions very, very carefully. If you are borrowing money from a commercial bank especially, or from a microfinance bank, please take your time and read through the terms and conditions of the loan. Read through the terms and conditions of the loan very, very critically before you collect the loan. If you know it contains terms that there are a lot of people whose life have been jeopardized by loans they collect from banks. Everything has been taken away from them because of a loan that they collect from bank, and because they didn't sit down to really scrutinize the terms and conditions that was offered to them. Next is to avoid late payments. Avoid anything that will make you to pay your debt late. Paying on time help you maintain a good credit score and also helps you avoid penalties. So you want to make sure you're able to pay your debt on time. The next is build a good credit history. Very, very critical. It's important for you to have a positive credit history that can help you in securing better loan terms in the future. The better your credit history, the better your credit score, the more you are able to take a more favorable loan. Let me say this: life is life. There are so many things that are going to happen that you don't have control over, right? There are so many things that are going to happen. You may be saying, I will never take loan, I will never take loan, I will never take loan, but something is going to happen to you one day that is going to push you to the corner, and you have no option but to go and take a loan. Like as we have mentioned severally, taking a loan is not bad in itself. What is bad is what you are using a loan for, and your habit, your attitude towards that particular debt that you have collected, right? So that is what is critical. Therefore, it becomes necessary for you to build a good credit score for yourself. Even if you think you are never going to need a loan, please build a good credit score for yourself. Just in case in case an emergency calls for it. Then next, let's look at some alternatives to borrowing. Assuming you don't want to take loan, you have vowed that you will never take loan. What are some of the things that you can do to make sure you're able to keep to that promise? Number one is what emergency fund saving. Now, we want to save regularly to cover unexpected expenses instead of relying on loans. One thing that makes people to take loans is what unexpected expenditures. You understand? When they go, like we said, life's eventualities happen, things happen. So you want to make sure that you are saving some money elsewhere. We have talked under saving. When we discuss savings, we have talked about this emergency fund, that there is a need for you from your income on a monthly basis to be saving some money in your emergency fund, right? The next is cooperative and rotating savings, what they call esusu or ajo. You want to practice that ajo, or you want to maybe join the cooperative that can give you loan on a more friendly and a more favorable terms. You understand? I think in some cooperatives they even give you loan without interest, because as long as you're a member, you are contributing, you are paying your dues and all that. So you want to join one or two cooperatives, and then you also maybe want to start practicing this daily contribution or rotating savings, or this ajo as they call it in some parts of the country. The next is government and NGO support programs. There are some things you want to do. Instead of going to take loans for them, there may be NGOs that are ready to fund it. There may be government programs that are also ready to fund the same project. So you might want to also take a look at some of these programs and some of these alternatives that you can use to loan. Now, managing debt and using credit wisely are essential for achieving your financial stability. By distinguishing between good and bad debt, and also creating a solid repayment plan for yourself, and exploring alternatives to borrowing so that you don't go borrowing all the time, you are able to eventually build your financial stability and your financial freedom. So today, don't forget that it is important that you focus on ensuring that when it becomes necessary for you to take a loan, you do so, and you do so pragmatically and with a proper plan. In the next session, we'll be discussing retirement planning and wealth preservation, how you can preserve your wealth so that you don't lose your wealth like a lot of people do in the process of building your wealth. Thank you very much for joining this session. See you in the next session.